A quick message from our interview sponsors. Green Lane Digital, Australian internet and technology investors. Looking for great entrepreneurs to work with? Go to greenlanedigital.com.au. Hi, I'm Gareth Rose from iPitch.com.au. In this first part of the interview, I speak with Emile Koskinas, Director of Your Empire Business Services. Emile has had an extensive background as a CPA accountant, but now he runs Your Empire Business Services, which provides specialist bookkeeping and accounting services for startups and SMEs. In this first part of the interview, we discuss the perspective of a new business starting up, what they need to do from a bookkeeping and accounting perspective, what systems, software and processes they need to set up, and why it's so important to set it up all correctly right from the start. Here's the interview. Welcome, Emile. Thanks for sitting down with me.
Thanks, Gareth.
So, look, to give this interview a bit of context, there's a lot of startups that are set up by founders who don't know a lot about accounting or bookkeeping. It might be a technical founder, they set up a website and suddenly they're getting sales and now they've got a real business. It's very easy to focus on the technical development or the sales, the marketing, building the product, and basically completely neglect the bookkeeping and accounting. So, that's a big mistake, as no doubt you're well aware. It's vital for a startup to set up the proper bookkeeping and accounting systems. Let's initially chat about the scenario. It's a new business or a fairly new business, and they're more just trying to get set up and establish themselves in their bookkeeping and accounting systems. So from, starting off, from a bookkeeping and accounting perspective, what would a new business need to set up?
Okay. Well, I think it's pretty important from the outset for the business owner to find someone that they actually can rely on to do their bookkeeping and accounting. And that would involve interviewing a number of bookkeepers. I encourage clients to basically go through the paper, get some referrals and find who an appropriate bookkeeper is, understand what their background is to see if they actually fit your business. And then once that bookkeeper has been selected, then work with them to decide which accounting package is the most appropriate for your business. There's quite a few offerings out there now, other than the traditional desktop models that have been around for about 20 odd years. So it's worthwhile to go through the process and understand what suits the business in terms of cost and in terms of functionality as well.
Okay, great. I'll get you to speak a little bit later as well, just so we make sure we capture this. What about us? I mean, look, I know from my own experience in previous startups that it's tempting for the person to take on the role of bookkeeping themselves. And I had a little bit of experience with accounting, or at least in back in my days in university and stuff like that. But I know it was a pain, and I probably didn't do it very well. What would you say, about that scenario there compared to engaging a professional?
Well, I think it's pretty clear to myself, and I touched on in my article I published about a month ago on the website. There's opportunity cost in doing your own bookkeeping and accounting, and to me, if you're a startup and you're surely focused on bringing a product to market or a service to market, for every hour that you spend doing your administration work, which tends to have a lower value than the development side, I think it pulls the business back and takes your focus off the main game. You can get some very effective bookkeeping solutions out there nowadays. Hourly rates are very competitive, so there's really no excuse in my mind to take your eye off the ball in terms of trying to develop the business. That's why you went in for it in the first place. It wasn't to be an efficient bookkeeper, it was there to actually build a product and build a service and go to market as quickly as possible.
Yeah, okay, that makes a lot of sense. Okay, so again, it's very early on they want to register a company. From a, accounting perspective or just generally, what do they need to do to get themselves set up with that?
They've really got two options. They can either go through an accountant who can build the paperwork for them, get all the books arranged, get all the registrations done for them. That's usually a more expensive solution because you're paying for the time for the accountant to do the work. Or at the moment there are quite a number of online offerings which are very effective. They're totally in tune with all the legal requirements, and for about half an hour's work and $200 to $400, depending on the complexity of what you want to set up, you can do it yourself. And most of it's like a bit of a wizard. You put in the details and it just rolls you through the whole process. And within about half an hour, you've got your company registered and you're ready to go, basically.
Yeah, great. Okay, so how then companies set up, how then do they set up bookkeeping and accounting?
Well, if you're not familiar with the process, as I mentioned before, engage a bookkeeper. Sit down with them, let them understand what your business requirements are, what the products you're going to be trying to develop, etc. And work out two very simple things in the beginning: which software to use and what filing system to adopt. Once you've got those two very basic elements in place, it allows the business to build up the volume of work progressively as time goes on. So, as I said, get your filing in place, because that is one of the biggest bugbears of most accountants, because information is not accurate. And then get a good sound accounting system in place in terms of software in the beginning to get halfway there.
Okay. On the software part though, what's some good examples of software to use?
Okay. Well, look, I think we're all aware of the offerings from MYOB and Quicken. They've been around the market for a good 20 years now. They're very reliable, with a good support in Australia, and they're pretty cost-effective solutions. They're typically what we call desktop solutions, where they reside on a PC somewhere or a server.
Yeah.
What we're seeing now is the SaaS model, the software as a service for accounting products, and the main players in that are Xero and Sasu, and they basically offer online, anywhere in the world, access to your financials. Most importantly, offer bank feeds, so all the transactional data now is fed automatically into your system, and you can arrange your invoices online, you can check your bank balances online, get all your contact details online, wherever you are. So you don't have to be fixed anymore to a certain desk to get your transactions done. And the most important part of that online software is that it allows your accountant or bookkeeper to collaborate with you. So you can both be looking at the same file anywhere in the world and be looking at the same information, discussing that and trying to work on your business rather than worrying about, is this the correct file, is this the correct data?
From your perspective or experience, do you sort of recommend or prefer any of those software packages, or is it more up to the person and their own bookkeeper?
Look, it very much depends on the business and the kind of business that you're running. If you're a stationary business, in other words, that you have a warehouse full of product, or you're located geographically in one area, I'm indifferent between MYOB and Xero because they both do an excellent job. But if you've got a mobile business, let's say you do a lot of travelling, you do a lot of interstate travel, overseas travel, then something like a SaaS solution like Xero or Sasu would be ideal, because it allows you to have constant interaction with your financials. One of the key differences between the software is that the online solutions are developing a lot of add-on products. So what you're finding now is you can get purpose-built payroll systems, you've got inventory systems, we've even Xero developed a partnership with an online retail system as well to do all your FPOS. And so it makes it quite portable. So if you don't like one part of the system, you can select another product to interact with it. And the key thing is that they all integrate seamlessly. So there's no transferring of data from one system to the other. Whereas something like MYOB is complete. It has payroll in there, has inventory in there, but it may not suit your business. So you can't modify it. It's quite expensive to modify something like MYOB. So it's horses for courses in terms of which software you select.
Yeah. Okay. In terms of actually setting up everything correctly from the start, or more around the importance of that, I see that there's both internal reasons for the business why you want to do it properly, as well as sort of, on the other hand, compliance reasons. Can you talk more about that?
Yeah, sure. Look, from the internal perspective, obviously each business owner wants to understand how the business is performing. Particularly in the startup phase, you've got very little revenue coming through, or no revenue, and a lot of costs. How are those costs performing against what you expected, and get your budget? Do they agree with the proposal you put to the bank who funded you, or the investor that funded you for the project? So internally, it's very much a case of making sure you know exactly how much you're spending, and have you allowed enough working capital in the initial stages before you go to market and get some revenue generated. The external one, obviously, the biggest one is the ATO. As a lot of people would have seen in the last probably 6 months, the ATO during the GFC was quite lenient on SMEs and their reporting requirements, and there was an unofficial take it easy approach to SMEs. In the last 6 months, we've seen that completely change, where they're following you up on like BAS lodgements, on non-payment of on BAS, and they're quite aggressive with issuing owners now for any money that's outstanding. Apart from the ATO, you've got payroll tax obligations for the New South Wales state government, and you've also got your ASIC reporting obligations as well. All of that can be made a lot easier if you've got the financial information ready to be able to be lodged accurately and on time with those external bodies.
Okay, so look, I mean, what you described, I can see it makes a lot of sense for a startup to engage, I guess, professionals so they can focus on their business and not do the bookkeeping and the accounting stuff. I was going to say boring stuff, but no doubt it's not to you. So, look, I guess my question is, say they do decide to engage an external firm like yourself, for example. How does that work? Do you sort of sit down and work out, this is the software, this is how you need to file it, you set up spreadsheets? Like, how does it all work?
Well, in terms of selecting a bookkeeper?
Probably more once they have. I think you talked about selecting, but let's just say they have. I guess I'm curious to understand, what sort of stuff would you do initially with a startup to get them set up?
Well, look, one of the key things is I believe every bookkeeper and accountant should understand the business. Because once you understand what the business is trying to achieve, then you can actually implement the basic kind of reporting and procedures that are relevant to that business. The requirements for a service-orientated business are totally different to one that sells widgets, basically. And often you'll find some people do an overkill in terms of reporting and the kind of process they put in place. So it's really sitting down with the owner, understanding what they want to know. Is it how many items they sell per year, how much money they make per item, or are they just interested in the overall service offerings that they bring out to the market, and developing the appropriate systems. That only comes with experience, understanding what is suitable for a particular organisation, and also, importantly, how much time the owner is going to put into getting it ready for you versus how much time they're going to pay you to do it. And there are some basic requirements like setting up business bank accounts that are separate from personal bank accounts, which is very important. Credit cards that are separate from personal transactions, and setting up a good sound check requisition system, expense tracking and things like that. They're all boring things, but they're necessary to be able to start measuring and building up the information you need to drive your business. Bookkeeping is like building a house. If the foundations are right and the information is correct, what you can do, which we'll go into later on, is a whole number of things in terms of reporting and understanding and projecting how your business will move forward.
Okay. So just to clarify that, a startup engages a bookkeeper or hopefully a good bookkeeper or accountant. They'll sit down, they'll discuss what is the business, how does it work, this is the type of reporting you need, and then they'll help them set up the systems and all that stuff so that they
That's
can.
Right.
Okay.
That's right.
Okay, great. Okay, so look, let's talk about some, I guess, mistake or problem scenarios. Look, I imagine there's plenty of times when a startup or a business has totally neglected their bookkeeping and accounting, and they get desperately in contact with you. What are some of those scenarios that you come across?
Look, I think the most common one is where people haven't got a system in place to record their transactions. They haven't even got a basic filing system in place. I mean, if I was to count how many times someone's come in with a box of invoices and receipts and statements and missing statements, I'd be here till tomorrow. It's very common because people don't see it as important until all of a sudden someone's chasing you to lodge a return to do your tax. So I think the key is a lot of people come in, they think it's not important. When everything becomes very urgent, they don't want to pay for the work because they don't see a lot of value in it. But the reality is the ATO want you to report, the tax office wants you to report, so you have to do it. There's no way around running a business and not reporting nowadays. And the key thing for me is that people just aren't organised. They think that by dropping a box of paperwork with your accountant or bookkeeper, that's enough to get accurate reports. How's someone going to file through 50, 60, 70, 100 sheets of paper and understand the nature of the transaction? And so that's the biggest thing that I see, is that people just don't get organised. A little bit of effort up front saves you a hell of a lot of time and money, especially later on getting the records.
Well, that was what I was going to get to. I imagine if you bring in the shoebox with receipts or something like that, it does cost a whole lot more to get it solved then, rather than setting up properly initially.
Look, without a doubt. I mean, the biggest conflict that I have with clients are ones that bring the shoebox, expect it to be done for nothing, and don't put any value on that work. My retort to that is then, in the first place, why did you get to this stage, and why you come to me in the first place? You obviously have a need to get this done. So if you put some time in the beginning, it wouldn't cost you as much. And look, we all know what minimum wage rates are. It doesn't take long to rack up a bill of $1,000 just getting paperwork in place. I had one classic client who was a CEO of a business, and he brought his records in 2 plastic bags and said, take care of it for me, but I don't want it to cost me a lot of money. And there and then I just said to him, there's going to be a minimum cost of this, and I could see straight away, $1,000 just to get the filing done and to get understanding what was there in the first place. So, you know, it's a responsibility, I think, of every business owner to take some ownership in getting their records in place. Because believe me, bookkeepers, tax agents, accountants do not like organising data through a piece of paper. They want to be able to actually help you determine your best tax position, to give you a good cash flow forecast and make the work interesting.
Yeah.
Just doing paperwork is really no one's cup of tea, I think.
Okay, no, that makes a lot of sense. So it is, I can see how important it is to really get it done, both from what you said and from my own experience doing it the wrong way anyway. What are some other, I guess, common mistakes that you see that, I mean, other than what we just discussed with, the lack of filing or the lack of, systems? What else?
It's pretty common. I see a lot of personal expenses being included with business expenses, and then that takes time to sort it out and justify, and also if it's incorrectly coded, may lead to issues we'll touch on this later on. I see people who use credit cards a lot for business, which is fine, as long as your paperwork's in place and you know what the transactions are. There's no point trying to work out you paid something $100 6 months ago and you've got the invoice because no one knows what it is. So it's often around the separation of business and personal expenses, and secondly, being prompt in attending to matters from the ATO or from the State Revenue Office and not letting things slide. Be very proactive with inquiries from outside bodies, because invariably the less proactive you are, the more aggressive they'll become in chasing you for potential debts.
On that, what sort of penalties are there if you do not lodge a...
Well, as a minimum, I'm glad you raised that, and people just don't realise it. There's 2 main penalties. If you lodge a BAS statement late, but you pay it on time, there's still a penalty for that. So a lot of people assume you pay your BAS, but you've got to lodge it, then there's still a $550 penalty on that one. If you lodge a BAS and don't pay the amounts, there's another $550 for that, plus also there could be general interest charges. And it only takes 3 or 4 late lodgements a year. That's $2,000 or $3,000 that really have gone to waste if you pay the ATO. And that money could be better spent on doing some market research or paying a good bookkeeper to do your work for you. So the hidden costs are always there. And in many instances, people say, well, I can get my accountant to talk to the ATO and remit the fine. It's still going to cost you money. The agent's got to pull up the ATO, put a case forward and explain why you haven't paid on time. So whichever way you do it, there's going to be a cost.
Okay, yeah, great. Cash flow. Look, it's vital for any business, but obviously when you're starting up, cash flow is particularly important. I mean, there's very little or very irregular revenue coming in. There's lots of expenses. What are some tips on cash flow that you can suggest?
Look, I think my biggest advice to all new owners is be realistic about your cash flow. Not just the hard costs, but the soft costs. So the hard costs are easy. You know that if you rent an office, how much that costs you. You know you've got a telephone line, how much that costs you. But have you really budgeted for your right legal costs, for your right marketing costs, and other consulting costs? And that's the area that I see where a lot of business owners just don't do enough research or be realistic enough. And they're too aggressive with how much I think they're going to need to spend to get a reasonable result. So those soft costs are the things that tend to really blow out your budgets. And then people really struggle to try and find that money. Because soft costs are also hard to justify to someone who's funding the business. If you go to the bank and say, look, I need $30,000 to do market research, they want to know, well, how do you come up with $30,000? What the result will be? And be very specific about what those requirements are. The other things are little things that, as I mentioned before, people often have a mobile phone. That's the main form of communication. I can't tell you how many times I've seen a lot of my clients spending $600 to $1,000 a month on a mobile phone plan simply because they've got the wrong plan. I mean, if you times that out by 12 months of the year, you could be wasting $2,000, $3,000, $4,000 a year simply because you haven't got the right plan in place. And I see people just don't do enough research to bundle their internet lines, their mobile phone costs, etc., to try and get a lid on that. And the big one that's come up now is electricity costs. That's a major issue for most businesses. Even for my business, I have to outsource all my servers because the cost of running an air conditioner full time and running servers internally just blew me out of the water in terms of how much it costs to run from here on. And I think the outsourcing model has a lot to do with the running cost of a business and also the reliability of it.
So, okay, what about, I mean, in terms of actual, I guess, bookkeeping systems or that sort of thing, and cash flow, keeping an eye on, what the cash is going to look like a couple of months ahead. What are your sort of thoughts around that? Is there any any tips you would suggest? Should they be checking it once a week or once like any sort of thoughts around just managing that cash flow in those early days?
I think the biggest thing that I see is to actively manage the expectations of your customers as to when they can pay you. Now some people are very good and demand a progress payment on a job, for instance. Then they say, well, my term is 7 days after we complete the job, and they enforce that by actually following up with the customer, having a good relationship with them. I've seen a lot of clients who can build out a very good month's worth of work, and then because they've got no relationship with the client, they're waiting 3 months to get paid. And often it's a phone call, it's a little bit of correspondence to let the client know that, hey, I've done the work for you, it's time for you to pay me. I think the collection side is the biggest issue that I see, and when you do have a bookkeeper, find out what their skills are in collecting money. You'd be surprised how many of them have absolutely no ability to collect money for you or on your behalf. But at the end of the day, it rests with the owner, particularly in the beginning of the business, because they should know the clients very well, and they should be very open about what their payment terms are. And use progress payments, deposits, try and get some cash up front, and then be very diligent about following up later on and collecting the money.
Okay, great. Look, in terms of the I guess tax and compliance requirements, and we touched on this a little bit earlier, but just to go over it again, what are actually the key compliance requirements that a new business or a new founder should know?
Okay. Well, look, the key ones all revolve around the ATO. It's getting your GST correctly calculated and lodged on time. It's doing your quarterly PAYG. That's something that I see a lot of the clients, for some reason or another, think that the PAYG can wait, but it's one of those costs or liabilities that add up very quickly, especially if you've got a few staff. Being across your payroll tax obligations. Look, the threshold for payroll tax is only about $650,000 in New South Wales. Once your wage bill goes above that, which is not very difficult sometimes in some larger startups, you've got a payroll tax liability. And so being aware of the GST, the FBT compliance as well, particularly around motor vehicles, is something I see a lot of where people don't understand that they do raise a tax liability if they have a motor vehicle within their business that they use for private use, and also the payroll tax. So the three big things that are front of mind in terms of managing very closely with the compliance side of it.
The thing that jumps out to me here is that there is, I guess, quite a lot, and being, I guess, myself more focused on things like marketing and sales and that side of the business, I can see that there's a lot of sort of accounting, compliance things and all, like bookkeeping, all this sort of stuff that could pop up that someone's going to do. So I guess coming back to this, is it the case that when you first sit down with your bookkeeper or accountant, say, hey, what are all the things I need to know? And they should be able to just tell you, yeah, this is how it works. You need to do GST, and they'll just cover it and tick them all off almost like a checklist.
Look, if they're a qualified bookkeeper who have gone through the proper education process, and more importantly, they're a BAS registered agent, and the requirements as a BAS agent to lodge with ATO are much higher now. They should be able to give you a very simple checklist. If you cover off your GST, your FBT, your payroll tax, and your PAYG, they're the four big ticket items in terms of compliance. Often you'll find bookkeepers say, well, it's the responsibility of the client to look after that. I'll calculate the figure for them, but I can't really follow my customer when they're going to pay it. I think that's the wrong approach. I think that a good bookkeeper or accountant should be very proactive and ensure that the client has enough funds to pay those amounts, send reminders through, and that's where you start building a value relationship with the client. Because, as you say, they're worried about the marketing and the product development, etc., and the customer relationships, and they haven't got time to worry about the compliance side of it. Someone's got to do it. You just can't ignore it, but they'll catch you.
Can you just clarify for me for a moment, in terms of a bookkeeper or an accountant, what's the difference? I mean, there is an overlap. In terms of particularly a firm, they might be bookkeeping and accounting, or you might just have an accountant, or you might just have a bookkeeper. Yeah. Can you sort of explain how what the terms are, and then how the different firms might operate?
Sure. Look, I think in a nutshell, a bookkeeper should be able to present you what we call a trial balance. Essentially, it's a accurate recording of all the transactions in the business. And they should be able to effectively say to you, this is the bank balance, it's accurate, this is your accounts receivable and accounts payable. Most bookkeepers should be very competent at that stage. The accountant should be able to take that information and sit down and analyse it and say, okay, your debtors look high because compared to your normal sales, this is the figure. Or your legal obligations for tax have crept up because you haven't paid the last quarter. So for me, the bookkeeper creates information, it's sound and accurate and timely, and then the accountant sits down with the owner and says, okay, this is what I see in your balance sheet, this is what I see in your profit and loss, is this your perception? And you try and test this gut feel that a lot of owners have against the reality of what the numbers say.
Okay, so in terms of recording transactions, you need to get a bookkeeper for that. So it could be a separate bookkeeper, and then you've got separate accountant that you use, or you could get a firm that does both. Is that, or you could do your own bookkeeping and then go to an accountant? Like what's? It
depends on. Look, you're right. There's a number of variations to that. The ideal situation is you have a bookkeeper who does the figures, and you have an accountant who reviews them, because then you've got two independent people. Because basically, if you've got a bookkeeper who's done some incorrect calculations, and they don't have the experience to really see through those mistakes, they could be conveying the wrong information to the owner. Whereas someone independent with a clear mind can look at the numbers, and if they understand the business, say, well, this looks right, this doesn't look right. What do you think? The larger organisations certainly have that ability. The smaller organisations will be probably a little bit challenged with that because of the costs involved with it. So it's always a case of ensuring that at least if the bookkeeper and the accountant are the same person, that there's a very thorough process of reviewing the numbers. An owner shouldn't rely on the accountant giving them the bottom line. They should go from the sales figure through their costs down to the bottom line and understand what makes up that final position down there. And that what tends to do is raise the question. Now the owner says, yeah, I think that does look it looks as if what I expected, or it doesn't look like what I expected. And then you can drill down into the figures and see what's going on.
Okay, great. So look, one of the common scenarios for a startup is around sweat equity and investing. So it might be that there's a couple of founders or two or three founders, and they're starting up and they're trying to work out what's the equity split. So if there's two, it might be 50-50. If there's three, it might be a third split. So that's one scenario. Or the other scenario is that they want their equity to vest over a period of time to, I guess, reward performance and time working within the startup. I guess my question is, from an accounting perspective, how do you sort of set that up in terms of equity, or even that relationship, so that it's set up from day one? This is what the plan is, and then how do you sort of potentially account for that?
Well, that's a very good question, and the way my approach to that is really to understand what the actual deal's all about. I mean, what is the business about, and what are the expectations of both owners? Each vesting sort of situation will vary from company to company, so the actual way to record it could be difficult to describe. I look at it at a high level and say, okay, is the vesting formula or the methodology understood by both partners or all partners? Can it be documented? If you can't document a vesting methodology, you got to ask yourself the question, is it actually valid? Will it work? Once you've documented it, you must run scenarios. You must run a few what ifs. Plug in some numbers and say, what if sales go to this level, and what if customer base goes to this level? What does that mean? And if that number that drops out makes sense to the owners and they agree on it, I think you've got a very sound base to move forward. If you don't, and it's a very verbal sort of agreement, a bit of a handshake deal, you do this, I'll do that, and we should be right after that, that's typically where I see a lot of problems, because you're not meeting each other's expectations. And then at the end of the day, when you try and sit down and negotiate, you've got nothing to negotiate over. There's nothing documented, there's no measures at all. So my answer to that is very simple. Be clear about the methodology, document it, and test it, validate through dummy figures, and to see that actually it does work. You may find the methodology is not valid for what both or all owners want to achieve. And then often it gets broken down into very measurable items. Leave the subjectivity out of it. Be very objective about how to measure what deems as vesting, what activities should be measured.
Okay, great. Well, I think that brings us to the end of the first part of this interview here. So basically, I guess what I'll be saying from that is, I mean, it's clear to me that a startup, basically a startup starting up, look, there's definitely a focus towards the business in terms of sales, the marketing, product development, getting customers, all that sort of stuff. That is vital, obviously, to get the business going at all. But certainly the bookkeeping and accounting shouldn't be neglected, and it's certainly, it's clear to me that the benefit of engaging someone who knows what they're doing up front to set up the proper systems, like you said, the proper software and the proper filing at a minimum, as well as to work out what the compliance requirements are. I guess those two key points, it's certainly worthwhile, so that made a lot of sense.
Okay.
Well, thank you for that.
Thank you for that.
That was the interview. Hope you enjoyed it. If you've got any feedback or recommendations of people who I should be interviewing, please let me know. I do want to hear about it. Get in contact with me via the iPitch website. That's the best way. And otherwise, look out for more interviews at ipitch.com.au. Thank you.